Today, Michael Sonnenshein steps down as CEO of Grayscale. The New York Attorney General settles with bankrupt crypto lender Genesis. And we take a look at a growing list of actions by the SEC to regulate DeFi and what they mean for the second largest cryptocurrency, Ethereum. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Bitcoin has hovered around the $67,000 mark all weekend and is jumping above that level again this morning. By noon Eastern, that cryptocurrency rose about 0.75%. Ether, meanwhile, is up nearly 1.4% this morning to the $3,100 level, and Uniswap's token inched 0.4% higher to $773. Okay, let's talk about the top stories. Michael Sonnenshein has stepped down as CEO of Grayscale after a decade on the job. The company announced that Peter Mintzberg, the global head of strategy for Goldman Sachs' asset and wealth management division, will take over. Mintzberg previously worked at BlackRock, Oppenheimer Funds, and Invesco. Of course, under Sonnenshin's leadership, Grayscale played a pivotal role in the launch of spot Bitcoin ETFs. The company sued the SEC for its denial to convert the Grayscale Bitcoin Trust into an ETF. The court then sided with Grayscale, saying that the regulator was wrong to deny the application. GBTC was the largest Bitcoin ETF to come to market back in January, but has a steady stream of outflows this year, $17 billion, according to FactSet. At the same time, GBTC's management fee is significantly higher than competing ETFs on the market. In a statement, Sonnenshein said the crypto asset class is at an important inflection point, and this is the right moment for a smooth transition. I wish the Grayscale team every success in its next chapter. Next, New York's Attorney General Letitia James is settling with bankrupt crypto lender Genesis for $2 billion. Now, back in October, James sued Genesis, its parent company Digital Currency Group, and partner company Gemini Trust, alleging that they misled investors about the Gemini Earn lending product. The deal does bar Genesis from operating in the state of New York and creates a victims fund for nearly 30,000 New York residents who gave more than $1 billion to Genesis through the Gemini Earn product. Notably, the settlement does not include partner company Gemini. The bankruptcy court has also approved a separate settlement that ends an SEC lawsuit against Genesis. That restructuring includes a repayment plan for customers who have had their tokens frozen on the platform since withdrawals were halted in November of 2022 after the collapse of FTX. All right, for our main story, as the SEC continues its spate of enforcement actions against centralized crypto players, the regulator has also set its sights on decentralized finance and Ethereum. DeFi players like Uniswap and Consensus have disclosed Wells notices from the agency, and the SEC has even reportedly begun investigating the Ethereum Foundation itself. Crypto World took a look at what the growing list of regulatory action by the SEC means for DeFi and Ethereum just ahead of an expected decision on Ether ETFs this week.
The SEC is just days away from approving or denying spot Ether ETFs, but the agency's stance on Ether is very much uncertain, and its crackdown on the crypto industry is only getting more intense. So far this year, the agency has sent Wells notices, filed lawsuits, or reached settlements with a whole host of crypto firms, and the agency's legal challenges are increasingly focused on Ethereum and decentralized finance in particular. 4 DeFi firms, including Shapeshift, TradeStation, Uniswap, and Consensus, have received Wells notices or settled with the SEC in 2024. And that comes just as the agency is reportedly investigating the Ethereum Foundation.
This is the harder case, the decentralized exchanges. It's less clear whether they are like an alternative trading system or a market maker, or whether they really are just a technology that, like, say, an unhosted wallet that allows you to do things with crypto that does not make you a broker-dealer.
The industry argues if the second largest cryptocurrency gets classified as a security, it could throw the future of the Ethereum network and many adjacent crypto firms into question. Exchanges both centralized and decentralized would be forced to choose, registered with the SEC, or delist Ether altogether.
If the SEC in fact does take the position that Ethereum is a security, pretty much everyone in this business that is using or providing services on the Ethereum blockchain, they're going to be on notice that they might need to be registered. And so whatever protections they thought they had before are no longer going to be there. and we're going to see really a shift in the industry.
Consensus tried to preempt the SEC's action with its own lawsuit, claiming regulatory overreach. Consensus says this followed 3 subpoenas issued last year, and a Wells notice from the SEC that claimed MetaMask Swaps, Consensus's business that lets users swap crypto tokens, as well as its MetaMask staking product, violated federal securities laws.
What's been alarming for us is they've been really targeting our developers. They asked for a list of the names of any Consensus developers who contributed any coding to the merge. They asked for the identities of public and private Consensus software developer code repositories. And those are very strange requests from a financial regulator. I can speak to that because I used to be in the CFTC's enforcement division and investigated cases myself.
The company's CEO, Joe Lubin, who's also a co-founder of Ethereum, told Wired magazine it's plausible the SEC could be taking a heightened interest in Ethereum because the regulator thinks its native token looks more like a security after the merge. That's when Ethereum switched from a proof of work to a proof of stake protocol. The network required volunteered users to hold its native token to validate transactions and generate new Ether.
First, we're asking the court to declare both that Ether is not a security and that the SEC lacks jurisdiction to investigate Ethereum. We're also looking for the court to declare that our MetaMask wallet, and specifically the features MetaMask swaps and MetaMask staking, are not unregistered securities brokers and they're not distributing securities.
The SEC is going to have to respond to this complaint. And the way they do that is they file an answer. So they're going to be hard-pressed not to state in their answer whether they think Ethereum is a security or not. I suspect that because of the proof of stake concept that changed in 2022 with Ethereum, they are going to take the position that it is a security.
Another major player to receive a Wells notice this year, Uniswap, hasn't taken legal action against the SEC, but a blog post titled "Fighting for DeFi" did say its legal team would be taking on the fight. Both Consensus and Uniswap suggest the SEC's broad approach to classifying securities may be outdated.
Every step in technology requires us to sit and rethink, how should this work? And does the framework we have now already work? And I think we're getting to the point where the framework we have now might not already work for a lot of these different decentralized applications.
In the same way that when you're browsing, the internet on Google Chrome is not the offerer of the websites and services you're accessing through it. And I think that's really the best analogy for what MetaMask is doing.
In its blog post, Uniswap points to a court decision in the SEC vs. Ripple case that it says, quote, makes clear that secondary market transactions in digital assets generally do not constitute investment contracts, thus alleging that the SEC has no jurisdiction over Uniswap. We reached out to Uniswap about how it plans to respond to its Wells notice from the SEC, but the platform declined to comment. One thing the SEC has been clear on is its classification of Bitcoin as a commodity. With Ether, the regulator has had more of a rocky history.
When we look at Bitcoin or if we look at Ether and the highly decentralized nature of the networks, we don't see a third-party promoter where applying the disclosure regime would make a lot of sense. So we're comfortable in some sort of viewing these as items that don't have to be regulated as securities.
Is Ether a commodity or a security?
Without speaking to any one.
I know you've repeatedly said you're not going to speak to one, except you've spoken to one, Bitcoin. So I'm asking you to speak to a second one, the second largest market cap here.
And speaking to the tokens, there's 10 to 12,000.
The SEC believes that much of the industry belongs under its jurisdiction already, and its lawsuits are simply bringing the industry under compliance. Crypto firms argue that the recent legal battles haven't given the regulatory clarity the industry has been asking for. Meanwhile, centralized players are still facing scrutiny too. In May, investment platform Robinhood announced it received a Wells notice for the company's crypto operations.
So if we've got companies that are, wasting resources trying to figure out, am I a broker dealer? Are these asset securities? We're already having a hard enough time trying to get them to be compliant with other, important laws. Anti-money laundering laws, anti-bribery and corruption laws, all the different state laws in the U.S. are around fraud.
We asked the SEC about its recent Wells notices sent to crypto firms, and an agency spokesperson declined to comment. At the same time, all eyes are on the agency's upcoming decision on spot Ether ETFs to see if the agency gives any more insight as to whether it believes Ether is a security and could face more oversight in the near future.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, and we'll see you then.